Hi, everyone. This is Chris Kimble, the founder of Kimble Charting Solutions, and welcome to your Daily 5. And today is Wednesday, July the 15th. Hope you're all doing well this summer. I wanted to look at a chart that kind of looks busy, so hang with me for a second, but go backwards first to share with you how the Swiss franc is a great timing tool to help you with whether gold's in a long-term bull market or it's time to become more active and trade and where the wind could be against you. So the one thing I had noticed, this chart I published on September the 1st of 2011, and on our blog, kimblechartingsolutions.com, I made the comment that the odds were high that the Swiss franc was suggesting that gold would be flat to down for years to come. And keep in mind in 2011 that gold had been moving higher for 9 consecutive years without a decline. There was plenty of bulls out there. And when I published this, it didn't go over very well with the bulls. But I'm not a bull or a bear. I'm just bullish on opportunities. But I want to share with you how you can use the franc as a tool to help you. And then the next chart, we're going to update the message currently from the franc. But one thing I had noticed going into the mid to late 90s is that the franc on the top chart, that when it had hit this long-term resistance line and then it tended to roll over, gold was flat to down for years to come. So that again had took place in 1995, the last time it had touched this line, until 2011. So if you'll see at the top of the chart, this is a monthly chart on the Swiss franc that it had created a huge bearish reversal pattern up against this, which was essentially a 30-year resistance line. And at the same time, gold was hitting a long-term resistance line at the same time. And so that's why we came up with the comment that this was probably a time that the buy and hold mentality was going to end for gold. And that's why kind of the guy on the upper right, when we said it'd be flat to down for years to come, and the guy's yelling in the phone, no way. It was understandable that people said no way that that could happen. But as we know in hindsight, that it pretty much did. So I want to turn back and now look to current messages from gold and the franc, since the franc is really a good helper in quality messages from gold. So the franc's on top, the gold's on the bottom, and you'll notice both had created a series of higher lows up against falling resistance for essentially from the mid 90s to the early 2000s. So for about 7 years, they both struggled against key resistance lines. But you'll notice they both broke out above resistance at about the same time. So what happened after that? Well, they both experienced tremendous rallies. So the breakout in the franc took place at around 70 cents, and it rallied to $1.40. So there was a 100% rally in the franc, and as we all know, for a currency, that's a large move, higher. But obviously, the bigger move took place in gold as it broke out around the 350 level and rallied clear up to 1900. So where do things look currently? So a similar pattern is taking place in gold, similar to this falling channel that had taken place for 7 or 8 years. Gold peaked in 2011 and has created a series of higher lows and lower lows until lately. And so you'll notice that once it broke out here at 1, it came back and tested old resistance as new support and blasted higher for years. And so this is gold weekly, and you can see a similar action taking place here. But what's the message from the franc at this time? So far, the franc is not joining in on gold's bullish confirmation message yet, but is testing a key level. So since 2011, the franc has created a series of lower highs. So at this time, the franc is not hopping on board gold's breakout, but I want to make everybody aware that if the franc would break essentially above the 115 level at 3, it would be giving gold a high five, a big time bullish high five level. So the takeaway from the past 2 charts is the franc I wanted to share with you is a very positive tool to help you in your gold tradings to determine, are we in a buy and hold market or more of a trader's market? So speaking of gold long term, I wanted to share that gold, this looks at gold monthly clear back into the 70s. And this is when gold peaked in 1980. Then you'll notice that I don't know if that it's, a lot of people may say that's not possible, but to me, it looks like it formed a 30-year bottoming cup pattern. And then after it did that, it looked to have formed a handle. And so we'll look at the scale on the right, but essentially everyone, this was 1,000 and it came back down to about 700, tested these old highs as support and then took off higher. So looks like to me it formed a long-term bullish cup handle, and then it went from 700 up to 1900. So what do we have over the last several years? So to me, over the last 9 years, it looks like we have a mini cup taking place. And so gold is now approaching the highs of when we wrote the piece, excuse me, in 2011, that gold ought to trade flat to sideways for years to come. So here we are 9 years later at essentially the same price. So if gold is to repeat, looks like it, from a cup and handle pattern, it deserves to take a break, form the handle, and then push to much higher prices. And so just to let you know, the 261 extension level of the 1980 high and the 2002 low happens to come into play at 3,000. So speaking of long-term Fibonacci levels, this is the Qs on a monthly basis, and we applied Fibonacci to the 2000 highs and the 2002 lows. And the thing that I wanted to bring up is charts, as we shared in the last Daily 5, that charts seem to have long-term memories. And so you'll notice the 161 level came into play, and tech struggled for many, many, many months, for well over a year. You could see it was resistance. It came back down and tested resistance and then broke above it, used old resistance as support, and then blasted off. And then guess what took place at the scary March lows? This large bullish reversal pattern, and then it shot higher. So the reason I wanted to prep you with this chart is where tech is currently. So this is the same chart again, that Fibonacci levels were applied to the 2000 highs and the 2002 lows. And you'll notice that the Nasdaq 100 is getting very close to the 261 extension level. And when we speak of very close, and we're talking 20-year pricing patterns, everybody, we're within 5%. And so to me, when we look back last time when tech reached these levels, it struggled to move higher for months and months because it essentially had to build a base. And so I wanted to just share that from a potential positive, these are monthly charts. This is the same chart, but based upon a closing pattern. And so as of the 17th of the month, the Nasdaq is trying to break through this 261 level on a closing basis. So in my opinion, where we end the month, a couple of weeks from now, from tech, is going to be really important from a very, very long-term message perspective. And so speaking of tech and leadership, this is the Semiconductor ETF SMH, and we applied Fibonacci to the 2000 highs and the 2008 lows. And so since then, SMH has done, it's been a relative strength leader compared with the S&P. In other words, it's been stronger than the S&P for years. It's formed this clean rising channel. And so what has my attention is where we are this month at 2. So we're testing SMH's 161 extension level, as well as the top of this rising channel. And again, as I mentioned in the last chart, this is a monthly chart. You can see a couple of weeks before the end of the month, it could be forming a small reversal pattern up here. So where SMH and where the Qs end this month is going to be very key because of these very long-term Fibonacci extension pattern that come into play. And again, the last, you can even see that when SMH reached its 2000 highs, it traded sideways for months and months. So if tech is repeating the past, most likely it's going to try to catch its breath at these long-term Fibonacci extension levels. So again, I thank you for joining us. And as we mentioned last time, you can reach us at KimbleChartingSolutions.com. This is my 40th anniversary in the business, and we're passing along a 40% discount to StockCharts members. So wish all of you well. Thanks for watching us, and have a continued great summer, everyone. Goodbye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.